Hello friends, myself Professor Umang Shah, Department of Accountancy, Assistant Professor, New LJ Commerce College. Topic that today I am going to cover is cash budget, which is Unit 3, Chapter 4 of Management Accounting Subject, Semester 5. We all know cash budget is estimated receipts and expenses for a definite period, which usually are cash sales, collection from debtors and other receipts, and expenses and payment to suppliers, payment of wages, payment of other expenses. Budget we made only for a specific period, whether it is for a 3 months, whether it is for a 6 months, or whether it is for a 1 year. Budget itself, it's estimated of expenses and receipts. Cash budget is estimated of receipts and expenses in cash mode, which includes cash and cash equivalents. In screen, you can find there is a one format of cash budget that how we will prepare. In this particular video, I have covered 3 months budget, that is you can see April, May and June. Title is like cash budget for the period ending dash dash dash. First of all, on a opening balance side, that is opening balance in the beginning of the cash budget. Then we have to add receipts like cash sales, collection from debtors. From total receipts, that is opening balance plus receipts, we have to deduct payments. Payments like cash purchase, payment to creditors, payment of taxes and payment of other expenses. Total payments, and we have received the closing cash balance. Closing cash balance become the opening cash balance of the next month. The advantage of using cash budgeting. Number 1, it helps determine whether cash balances remain sufficient. Number 2, it helps a company determine whether too much cash is retained or not. Cash budget helps company to determine the cash balance in exact minimum how much cash balance is required for a particular period. We also know from the cash budget that cash amount required. Number 4, use this information to determine the extent of the credit sales. How the credit period we are going to give to our customers. We can compare with other industry and we can take the decision. Number 5, a company with access can afford to sell on a credit and thereby boost profitability. But for that purpose, we have to prepare cash budget. Conversely, a company hard pressed of cash might decide to sell products at discounted prices for a cash, which increase sales also. Offering such discounts may be cheaper than the cost of overdraft fees or a credit interest. There are also methods of preparing cash budget. First is receipts and payments method. It's a simple method. We have to add all the receipts in beginning balance, that is opening balance of the cash, and we will deduct all the payments actually made in a cash. We will receive the closing balance of the cash. This is as simple as add or plus. Number 2, adjusted profit and loss method, which other name is adjusted earning method. Technically, we can say that it's a cash flow method. In cash flow method, we will find adjusted profit. We will adjust increase in current liability, current assets, or decrease in current liability and current assets. Accordingly, we will find one cash balance. Third one is a balance sheet method. This is finding a balance without cash or without overdraft. What it means? If asset side balance are higher than the liability side, then balancing figure we termed as overdraft. And if liability side balance is higher than the asset side, technically we termed as a cash side. Generally it's a balancing method. And last one is working capital differential method. We all know we require some working capital to run the business. So what exact the opening and closing balance that we have, we compare it and we decide the what the cash balance. These are the methods of preparing cash budget. We are looking towards one example, that decide the cash receipts from sales for the budgeted period, that is October November, from the following information: month, August, September, October, November and December, total sales is given, that is 20,000, 21,000, 23,000, 25,000, 30,000. Credit terms, 10% sales are on a cash basis. What it means? Total sales, if I am taking about the example of the August month, 10% sales are on a cash basis, that is 20,000 sales into 10%, 2,000 are cash sales. 50% of credit sales are collection next month and the balance in the following month. How? We are taking working note bifurcation of sales in cash and credit. 10% are cash sales and 90% are the credit sales. That August 10% 2000, 90% that is 18,000, September 2100 that is 10% and 80,900 that is a credit sales. Next, now 50% of credit sales are collection next month and the balance in the following month. How we will do? We know that in August month 18,000 is the credit sales, that is 90% of the total amount, and in September month 18,900 is the credit sales. Now we will bifurcate like this: month August, September, October, November and December. We have written credit sales. Now we see 50% in the next month, that is 50% of the August month in the next month, that is in September month, 9,000 rupees, and remaining 50% in next to next month, that is in October month. So 18,000 of the August we will receive, 9,000 in a September and 9,000 in October. Then we will calculate for all the months, that is from the August to December. And then we have to decide cash balance of budgeted period, that is October to December. So we will add 50% amount of the next month and 50% of the following month. In this table, we can see that in October month, we are actually receiving 9450 and 9,000. That is 9450 of September month and 9,000 of the August month. So in last table that we can see how we are doing the same calculation. So this is the final total cash receipt. In October month, cash sales is 2300, that actual cash receipt. 50% of receipt, that is 9450. 50% of receipt of next to next month, that is 9,000, and total 20750, that is of the October month. Same for the November month, 2500 is a cash sales, 10350 is 50% of the receipt of the previous month, and 9450 is the receipt of the previous to previous month, total 22,300. In December month, we will go same manner, that is 3000 is a cash sales, 11,250 is a 50% receipt of the previous month, 10350 that is 50% receipt of the previous to previous month. We will get total 24600 in December month. So students, we have understand how to calculate actual cash receipt and actual cash payment. In this particular video, we have understand regarding the preparing of the cash budget. Cash budget is only cash receipt and cash payment. There is no conservatism approach. We are not recording any receivable or payable amount. Thank you.